There are people talking about this dollar devaluation plan. And that's exactly what I've been saying. You do that by letting gold go much higher. Now, Luke Gromen, who's one of the smartest guys I know, says they're going to let gold go to 7,000 or 8,000 and then revalue it. Well, it's on its way, slowly moving up in that direction. Things are going to start to get crazy. So what is available today may not be tomorrow. And if you're not convinced that the price is going to continue to move higher, that you might see some big pullback, take your holdings, take your money that you want to spend.
In a recent conversation, seasoned financial expert Andy Schectman shared a stark warning about what may be coming next for the US dollar and gold. He explained that discussions are intensifying around a potential dollar devaluation plan, a move that could drastically reshape global markets. According to him, one of the clearest indicators lies in the quiet but steady rise of gold. As he pointed out, some analysts, like Luke Gromen, predict gold could reach $7,000 or even $8,000 before being officially revalued. The reasoning is simple yet alarming. To balance unsustainable debt, governments may allow gold to soar, using it as a lever to reset the monetary system. Schectman cautioned that the opportunity to act, to protect one's assets, may not last long. What's available today might be gone tomorrow. Stay informed, stay prepared, and don't forget to like and subscribe for more updates.
They raise gold and Bitcoin to devalue the dollar, not to let them go higher because they want to make more money. It's to devalue the dollar to sell manufacturing that you brought back at zero upfront borrowing costs. Well, how do you continue to get gold and Bitcoin higher? I've got an idea. It's called the Genius Act. You create the Genius Act and think of the $3 trillion that's holed up at the Federal Reserve that the banks don't want to lend out into this market. They'll just buy more stable coins with it, which will pay, they can turn around and put this money to use. And now all of a sudden you get the spread between the treasury issuance and the stable coin that is used to buy more gold and more Bitcoin, which devalues the dollar further, and more treasuries, which pushes rates lower. You fund the government through synthetic demand, and you need all of these critical elements, not only to bring back manufacturing, because you need it. In fact, there are a lot of people that will tell you part of the reason China likes the price of silver cheaper is because they're accumulating as much as they can, but they need it for manufacturing. They need a low silver price for manufacturing. All of this stuff, to me, is all part of a bigger picture. You can't look at one without the other. That bigger picture is to bring back manufacturing in a massively devalued dollar at a much higher gold and Bitcoin price in order to devalue the dollar, in order to pay off the debt, in order to reshore manufacturing at zero borrowing costs and sell your product to the world. It's all part of the same deal. 85% of the metal that is going into the central bank coffers is not being reported to the IMF. And if the metal is not 999 pure, that doesn't have to be reported, do you think that's why China's buying doré and concentrate? I wonder, perhaps. And how about Russia being the first bank to acknowledge it, but Saudi Arabia buying tons of it, and India buying between 500 and 600 million ounces over the last 6 or 7 years. And now it's a critical mineral here. I would argue that they are buying it. They're just not telling us that they're buying it. And this is why you're seeing the lowest float ever in the history of the LBMA, because all of these countries have been quietly doing just that. And if things were as important and strategic and critical as many of these nations, including our own government, say they are, well, then you don't want to be open and forthright about what your intentions are. I do believe that it has a role as a monetary asset in a dollar system that is devaluing. Gold will have a monetary aspect to it, whether it be with the BRICS nations in their settlement system or backing the treasury. As Judy says, but look at these states that are saying gold and silver are legal tender. Now, if I had to guess, how could gold and silver reintegrate into a monetary bimetallic system? I think the state of Texas has a good plan where you take your gold and you take your silver, if it's American made, and you bring it to the Texas Bullion Depository. This is where they're going, I believe. And they will check it in. Okay, Michelle dropped off 400 gold eagles and 10,000 silver eagles. And bang, they give you a credit card that says, this is now yours, free to spend at any establishment, and it will just be deducted out of your inventory. This is how you take gold and silver in the 21st century and use it as legal tender rather than going door to door. So could it become part monetary? Absolutely. But I think it will be in a manner like that, like Glint, right? Where you can take your Glint card and spend it. But I think there will be states like Texas maybe like Florida, like Oklahoma, like Arkansas, that will say, put your money into a state-sponsored vault, get an accounting, a real-time accounting and auditing, and use it as your form of money. I have talked at length since November. We've seen a continual influx of metal coming into the COMEX market. And you can blame it on tariffs or blame it on arbitrage or blame it on whatever you want. I don't believe any of that. I think this is much deeper. There are people that want us to believe it's not as deep. Even the Bloomberg article that says that there are ships that are being loaded up to send silver over to London. I don't believe that at all, as a matter of fact. I think that's spin doctoring, kind of to buy some time for the LBMA. If silver was so plentiful, they wouldn't need a PR scheme to tell us about the silver that's heading over there. I don't believe it at all. But when you talk about exacerbating what's happening, we've already seen almost 17 million ounces of silver delivered into COMEX in the month of October. And when you see a London spot silver price at a $3 premium to the New York futures, a spread that hasn't been seen maybe ever, at least since the Hunt brothers in 1980, and borrowing cost in London that has spiked to 100% annualized, worse than the 1980 panic. What this tells us is that the demand for physical silver at the highest level, we've talked about the central banks buying it. We've talked about China buying it and flying around the world and buying doré and concentrate. We've talked about Russia and their really massive acquisition of silver over the last 5-6 years. We've talked a lot about Saudi Arabia and their fund, who just bought a few $100 million worth of SLV. And that sucks in and of itself that it was SLV. But remember, at the level they paid or bought, they can stand for delivery. We've talked about Russia adding it to their strategic stockpile. And lo and behold, we find the United States, the U.S. government, who wouldn't know a silver coin if it fell on their foot, it seemed all of these years, have now reclassified silver as a critical mineral. They have put a floor under the price of silver. So when you put all of this together and then add into it the most sophisticated traders on Wall Street, bringing metal in at the levels that they are, that is what is driving this. And in an environment where the LBMA, according to David Jensen, someone that you need to get on our show, David Jensen is amazing. And no one talks about the LBMA backdrop the way David does. And I think it's really very important we get him on. But what he's been saying lately is that there's 140 million ounce float of silver in London, meaning that's the amount of silver backing the contracts. The other silver they have there, the other 500 million or so ounces belong to the ETFs. So the only metal that is available, supposedly unencumbered, and who knows how much of it is unencumbered, when they already told us last year that they overstated those numbers by 100 million ounces at the LBMA. But if we take them at their face value, 140 million ounces, according to David Jensen, trading 600 million ounces a day in deliverable contracts. What could possibly go wrong? We have an environment where the exchanges and the paper promises are being usurped and passed on, even at large premiums right now, where if you sent your metal, if you bought a contract on futures and sent it to London at a $3 spread, that's a big arbitrage. And there will be some players that do that. But I don't think the smart money, even at a $3 per ounce premium to send it to London, really wants to do that, because silver is becoming far more valuable than the currency that is used to buy it or to sell it.
In a deep and layered discussion, financial analyst Andy Schectman explores a complex but revealing theory that the rising prices of gold and Bitcoin aren't simply market phenomena, but strategic moves in a broader dollar devaluation plan. He explains how mechanisms like the so-called Genius Act could leverage trillions held in reserve, using stablecoins and synthetic demand to fund government debt while suppressing borrowing costs. Behind this intricate web lies a goal: to devalue the dollar, revive U.S. manufacturing, and reset global monetary order. Schectman also points to nations quietly accumulating metals like silver and gold, hinting at a massive coordinated shift beneath the surface. Let's get into the interview.
China, the second largest producer of silver in the world, David Morgan will tell you when he went to China, they tried to tell him they were number one. So number one or number two, number one in gold, yet they're flying all around the country, buying all around the world. Latin America, Peru, and Mexico primarily buying doré, which are crudely refined bars, and concentrate, the byproduct of the mining process, directly from these players, disintermediating the market right from the miners, disintermediating the market, and sending it all the way back to China on their expense, paying double what the West will to refine it themselves. These metals are becoming very critical to them. So, yeah, why wouldn't they want this to happen? To allow the price to go much higher. And how do they do that? The same way I've been saying this since the first interview you and I did together years ago. They're draining the exchanges slowly and methodically. They're standing for delivery in London. The London Metals Exchange has the lowest amount of silver, the float, they've ever had in the 140-year history of the exchange, at least since they started keeping records. And so they have been using the idiocy of the Western suppression system to beat us at our own game. The part that most analysts and most naysayers have a hard time justifying when we say this is that they haven't done it like that. Everyone in this country expects instant gratification, and if it's not fast enough, if it's not immediate, it ain't fast enough. That's their genius. And when the U.S. government reclassifies silver as a critical mineral, they're not going to be in a rush to send it over there to capitalize on some arbitrage. Yeah, you're talking millions of dollars. So what? I mean, I don't mean to say it in a cavalier manner that way, but I do not think, I think the big noise about sending silver to London isn't strength. It's a cover story to calm nerves. And if supply were just fine, they wouldn't need this PR push. This is a Band-Aid. This is not a cure. Moving a few shipments around buys time, but it doesn't solve the core problem, and that is that there's not enough silver in the right place at the right time. These shipments are not proof at all of silver strength. They're proof of silver stress, in my opinion. And the louder the headlines, the tighter the market really is. And we saw that, Michelle, with all the nonsense that was coming out of the mainstream, like Reuters and like Bloomberg, when all the stuff was coming in. They were saying, oh, it's arbitrage. BS it is. Oh, it's tariffs. BS it is. There's something bigger at play here. And you know what it is? In my mind, this is, for 40 years, the United States bet on a strategy. They bet on a strategy of a strong dollar, U.S. bonds, service jobs, while ignoring factories and commodities and gold and silver, while China did the opposite. It built factories, it stockpiled commodities like gold and silver, and it stayed away from relying on the dollar. And what you are seeing right now, in my opinion, is confidence in the U.S. dollar, really more than anything, disappearing. It's kind of like we call our dollar currency, but it's more like a piece of ice sitting out here on patio here in Aruba. It doesn't last long. It's melting. The value of the dollar is melting. I would, instead of taking big distributions into the company and taking profit, I put all my profit back into the company to buy more inventory so that we're in a good shape right now. But I will tell you, within a week, if this continues, no one in the country will have stuff for immediate delivery. You'll all have to wait as more stuff comes in from refiners and mints around the world, hopefully in a timely fashion. It's that serious. I mean, $1 billion, $2 billion would obliterate everything that's in the Western market in terms of physical supply. It's a just-in-time market.
And then again, it talks about timelines, right? Because it's not like you can get silver that easily. So
it takes time for it to be refined and shipped. And if you realize you got the U.S. and the Canadian Mint and a couple of refineries in the U.S., the rest is from around the globe. You got Austria, Australia, South Africa, the United Kingdom. You know, these mints, not only do they need to produce it, they need to ship it across the Atlantic Ocean. And at some point, do they say, you know, we'd rather prioritize our own people? Now, you sent me something that I can't validate, but if it's true, it's beginning to show cracks in much bigger seams, where you sent me something you saw on X that said the Perth Mint has run out of product for immediate delivery. Is that true? Don't know. We'll find out. In that same article, there was a dealer who has stopped accepting trades. One of my large distributors in Miami sent me an email almost identical to that Monday morning saying, we are not taking any orders until we get a grasp on the premiums and on the spread, because what happens is, if I go out and I buy 300,000 ounces of silver right now.
In this powerful closing discussion, the reality of global silver dynamics takes center stage. China's relentless acquisition of d'Or bars and raw silver, directly from miners in Latin America, signals a long-term play to secure dominance in critical resources. Meanwhile, Western markets face tightening supply, with the London Metals Exchange seeing its lowest silver float in over a century. As refiners struggle and inventories vanish, The cracks in the system are widening. This isn't about temporary arbitrage. It's a shift in power, from paper promises to physical assets. Confidence in the dollar continues to erode, and the metals that once backed it are being quietly reclaimed. A historic transition is unfolding, and it's happening in real time. Like, share, and subscribe for more.